Major stock indexes advanced Wednesday, with the S&P 500 setting a new all-time high. Before markets shut early ahead of a Christmas closure tomorrow, the blue-chip Dow Jones Industrial Average, benchmark S&P 500, and tech-heavy Nasdaq were up 0.6%, 0.3%, and 0.2% respectively in recent trading. The S&P 500 hit a fresh intraday high of 6,935, a day after setting a new closing record. While the Dow is on pace to post a closing record of its own, the US stock market will close at 1:00 p.m. ET today. While the bond market will shut at 2:00 p.m., markets will be closed for Christmas tomorrow, but open on Friday, yesterday. The three major equities indexes ended higher for a fourth straight session after delayed third-quarter GDP figures came in better than expected. Tech stocks, which have led the recent charge, turned in another solid performance yesterday, with shares of chip giant NVIDIA rising 3% to lead the Dow. NVIDIA stock was down 0.6% in recent trading following a Reuters report that the world's most valuable public company had stopped testing an Intel INTC production process to make advanced semiconductors. Intel shares fell about 1.2% Wednesday. Nike NKE was the top performer in the S&P 500 and Dow, with the stock rising more than 4.5% after a regulatory filing revealed Apple APPL. CEO Tim Cook bought nearly $3 million worth of shares on Monday. Gold and silver futures set all-time highs for a third straight day, Wednesday rising to $4,555 and $72.75 an ounce, respectively. In recent trading, gold was up 0.1% to $4,510, while silver was 1.2% higher at $71.95. The 10-year Treasury yield, which influences interest rates on a variety of commercial and consumer loans, slipped to 4.14% from Tuesday's close of 4.17. Bitcoin was trading around $87,300, down slightly from a high earlier Wednesday, about 87,800. The US dollar index, which tracks the value of the greenback against a basket of foreign currencies, was near flat at 97.94. West Texas Intermediate futures. The US crude oil benchmark ticked higher to $58.55 per barrel. Google-backed software firm Motive Technologies details IPO plans 1H 10 minutes ago. 2026 is shaping up to be a busy year for tech IPOs. Add Motive Technologies to the list. The AI-enabled fleet management software firm filed its Form S-1 registration statement with the Securities and Exchange Commission on Tuesday, saying it had applied to list on the New York Stock Exchange under the symbol MTVE. Tech firms expected to file for IPOs next year include OpenAI, SpaceX, and Anthropic. San Francisco-based Motive, whose Series F convertible preferred stock owners include Alphabet's Google Ventures, said revenue for the 9 months through Sept. 30 rose 22% year-over-year to $327 million since January 1, 2023. We estimate that our platform helped prevent over 170,000 accidents, saved 1,500 lives, and in 2024, delivered over $175 million in fuel and fraud savings to our customers, the filing said. On average, customers that used our dashcam reduced collisions by 80%. Shares of Dynamax are up nearly 40% today. Here's why the stock is flying. 1HR 46 minutes. AGA shares of Dynavax Technologies DVAX skyrocketed after French drug maker Sanofi SNY said it would buy the biopharmaceutical firm for $2.2 billion to expand its hepatitis B offerings and enter the shingles vaccine market. Sanofi said it would be paying Dynavax investors $15.5 per share in cash, a 39% premium to its closing price yesterday. Dynavax shares were recently trading just a few cents below Sanofi's price for its shares. The transaction is expected to close in the first quarter of next year. Dynavax currently has regulatory approval for its Heplisav B hepatitis B shot, a 2-dose regimen for adults given over a month's time. It also is in a phase half trial of a shingles treatment called Z1018 and has other candidates in the works. Thomas Triumphi, Executive Vice President of Vaccines at Sanofi, said the additions of Heplisav B and Z1018 bring new options to our portfolio and underscore our commitment to providing vaccine protection across the lifespan. Sanofi said there is an unmet need for hepatitis B and shingles treatments, as nearly 100 million people in the US who were born before 1991 are unvaccinated. Dynavax CEO Ryan Spencer said the deal will provide the global scale and expertise needed to maximize the impact of our vaccine portfolio. Shares of Dynavax have spent most of 2025 in negative territory, but with today's gains, they're now up about 19% year to date. A software stock is joining a mid-cap index. Its 2025 climb is continuing to HR 11 minutes. Aga shares of YPath rose Wednesday on news that the business software company will join the S&P Midcap 400 Index. S&P Dow Jones Indices said YPath would become part of the index prior to the opening of trading on Friday. It will replace Synovus Financial SYN, which is being acquired by Pinnacle Financial Partners PNFP in a deal expected to close soon. S&P Dow Jones also said that Versant Media Group VSNTV, a spin-off of media giant Comcast CMCSA, would replace Brandywine Realty Trust BDN in the S&P Small Cap 600 Index ahead of the open on January 6. The spin-off is anticipated to be completed a day earlier. Comcast is set to remain in the S&P 500 Index. A number of updates to the makeup of the S&P 500 have recently been announced. Inclusion in an index can be beneficial to a stock because it becomes exposed to more potential investors and allows it to be included in funds that track those indices. YPath shares were up some 5% in recent trading. They have added about 30% of their value this year. Nike leads DOW after Apple. CEO Cook buys shares 2HR 47 minutes ago. PPL. CEO Tim Cook evidently is confident that Nike NKE shares can make a comeback. A regulatory filing revealed that Cook bought nearly $3 million worth of Nike stock on Monday, acquiring 50,000 shares at a weighted average price of $58.97. Nike shares jumped in response, rising more than 4% to pace DOW advances Wednesday. Even with today's surge, Nike shares have lost about 20% of their value this year. BP to sell 65% in Castrol. Business oil giant BP agreed to sell a 65% stake in its Castrol lubricants business to investment firm Stonepeak. BP is to take in about $6 billion for the sale, which is expected to be completed by the end of 2026. The move is part of the oil company's efforts to focus its business on oil production after its shift to more renewable energy delivery proved unpopular with investors. The sale marks an important milestone in the ongoing delivery of our reset strategy, said BP interim CEO Carol Howell. Meg O'Neill will become the company's CEO in April. US-listed shares of BP edged 0.3% lower before the opening bell. Even Santa isn't immune to today's tough job market. 4HR 29 minutes ago, having a real beard is worth an extra $9 an hour for people who work as Santas. An analysis of job postings found demand for Santas with real beards has surged over the past 3 years, and their pay has gone up accordingly, even as the overall number of Santa jobs has declined. According to a report Tuesday by Revelio Labs, a data analytics company, pay advertised for real Santas with real beards averaged $30.84 an hour compared to $21.83 for those who must don false whiskers. Revelio created the report by analyzing job postings on professional networking websites. In some ways, the trend among Santas mirrors the trajectory of the overall job market. There are fewer jobs available, while workers with in-demand skills are commanding higher salaries. Michael Saylor has a new story to tell. Strategy goes beyond Bitcoin exposure. Bitcoin crusader and strategy frontman Michael Saylor has a new story to tell about his company. Some experts think it could help revive the company's beleaguered stock. For years, the company and its shares attracted a loyal following as a Bitcoin proxy. Lately, though, they have lost some luster as spot Bitcoin funds got bigger and crypto businesses proliferated on major exchanges, giving traders more ways to play crypto. The stock started to slide and investors fretted that the company would be driven to sell its Bitcoin for the first time. Pullbacks in crypto markets and worries that the stock could be removed from some indexes have Strategy and Saylor under some fire. So what's their move? Saylor, the company's executive chairman, has revamped his pitch about the company, which he now calls a capital markets platform that might help revive a stock down more than 45% year to date, far further than the roughly 6% drop in Bitcoin over the same period. What we're building goes beyond Bitcoin exposure, Saylor told Investopedia Monday. It's a capital markets platform, digital money built on digital credit, secured by digital capital. That's not something an ETF or a fund structure can replicate.